Good afternoon, traders. Today's Tuesday. It's around 2:15 p.m. I had to do a quick video because I have an appointment after the bell closes. So we're looking at the S&P futures right here, which looks like we're going to be heading down to this 317 level to 316. These two levels are what we've been playing lately. Also, 312. Over the last 2 days, it's been textbook trading. Pretty simple. I've had a real cocky, confident attitude with the market because it's very predictable. When you're in the range, that's when you really need to capitalize because until we break out of that range, there's going to be nice trading, especially this time of the year when the volume's heavy and you have news in the market every single day. These are the best times to trade. So yesterday we shorted, we covered around 316. We didn't catch this move right here, which is okay. And then we got below the 312, which is a level that it was a prior high that we put in last Thursday, and we tested it a few different times here. That's how we came up with it. Intraday levels are just as significant as daily time frame levels. So when we got below the 312, easy short back down to 1302, 1303, which y'all guys already know there's a lot of demand down there. Bounced back up today. You had a lot of downgrades come in. A couple stocks reported earnings yesterday, Sienna, and then we had Urban Outfitters, which had a huge miss. They were down 15% this morning. Energy sector's a little weak right now. It seems when crude goes down, the market's been going up. Now you see crude catching a bid, and that's why the market's selling off a little. The dollar is up about 27 cents today, around 77.05. I'll move to that just in a moment. But right now, I just want to explain what we did. So when we opened up, this is textbook, guys. You know, really good professional traders make about 78% of their money in the first hour of the day. A lot of people will make 95% of their money and just take off the afternoon session. They'll trade till about 11 a.m. and then they're done for the day. And if they come back at 2 o'clock, if they see something that looks really good, then they'll trade it. But they're not over trading, because that's what a lot of new traders do. They tend to over trade. And if you're a day trader and you're not making a lot of money right now, you need to step back and analyze what's wrong with your trading. You know, every strategy, if it's traded the right way, will work. It all depends on the trader and how you can adjust. When things are going great, everything's easy, but as soon as that momentum slips up, a lot of people fall back and go into their own ways. Well, over here, my videos I create to help you guys stay in that winning mode, to have that cool, cocky confidence that can enable you to profit every single day. So going on today, we had a nice little decent flag pattern form here, this consolidation between the 317 and 316 level. They rocketed up, and we will continue to watch the market. If we come down here to 316, we're going to look to probably get long again. Alright, we're looking at crude oil right here, about to head back through the open of the day, and you could get a lot of buying in here to bring it back up to the prior day's high around 105.97. So as soon as we break and hold over this 105.35 level, I assume that there will be a range bound trade in it. And if we could get and hold above this prior high of the day, I think that 110 is imminent. It just seems that every single dip gets bought aggressively on high volume. So I'm definitely still bullish on crude oil. My prediction was 110. I made that a while ago, and we assume that that will be hit within the next week or two, unless something comes out and it's a drastic change in news, which I don't think is going to happen. Alright, so looking at the US dollar, it was a big gap up. A lot of traders had this 77 psychological level on their charts after yesterday's close. Alright, so I just wanted to point something out to you guys. This is a perfect bear flag, what you would call it's a technical formation. It's when you have a large sell-off and then you see a wedge bound rally that then fails, and that's when a lot of the technicians go to the hedge fund managers along with fundamentals and combine both of them to set up a thesis and a trade plan, which was well executed, and it's been pretty simple if you've been shorting the US dollar. Now, just like all these psychological levels, every hold number, especially on future indexes, plays some significant role in how the market will move. You see, the last time we tested 77, there was a lot of demand here, and then you saw the buy-in. But right now, 77 is being used to gauge which direction the US dollar will take. Overall, of course, we're bearish for currency devaluation. We believe there will be a QE3 and a QE4, but right now we think that as long as we hold above 77, we're going to look to buy this thing, and the next little line will be the 20-day moving average, and that will be around 77.55. And then once we get there, we'll say, okay, well, if we get over this, we're going to head to 78. I think 78 is going to be the main round number that we have to look out for. I believe there's going to be a lot of supply up there, so this is another one we are watching. Alright, next we're looking at silver. I'm going to be brief on this. We have a target of 50, which is the 1980 high. A lot of charts won't pull that much information up, so you have to go and look at a service that offers historical charts. Not even Thinkorswim offers it. But right now we're pretty much unchanged, down about 8 cents, 0.2%. And that's nothing. So the next alert we have set is 36.74. We still have ascending 5, 10, 20, 100, 50, 100, and 200. So nothing's changed in our game plan. We continue to hold a large position in silver. Next, we're looking at the gold futures. Just yesterday in the London session, we hit a high of 1445. That's where another technical alert is set. And looks like we'll pull back to the 1420. Right now we're currently trading at 1427. That's where the 10-day moving average is. 5 days still ascending right here. We're in a little consolidation. I think that it will be bought, and we will break out of the 1450 and head to 1500, guys. Now looking at the Russell 2000 cash index. We have to be a little flexible here when we're trading in this range. Remember, 830 is that level that we have to get over in order to retest the prior high and hit that 840 level. And then 800 is still our range. So a 30-point range is a decent range to trade, especially when you're trading small caps, and you could continue to take advantage. I know people that will buy these little, $4 or $5 stocks and make a living off of that. That's not my style, but as long as the strategy works, I totally respect anybody who is making money. Alright, so once again we are watching Mosaic, and this could be a potential bull flag. It's a little long and it's a little shaky. It's not a perfect one, but I could make a case for it. Now this 80 level is not only a key hold number level, but it's also not far from where the 100-day moving average is. We're getting a bounce right here intraday. I'll pull that chart up in just a moment. But I actually bought some in the money calls, and we're looking for a move back up to 85. If I can make even 1.5 points off of this, I'll take 3/4 of my position off and let the house's money ride out. And that's what we've been doing, guys. A lot of big day trades have been taking place on our side, and the swing trading has actually slowed down a little bit just till we get out of this range and either break up or down on the ES. And you see we bounced right off of that 80.07 level, and we just been going up ever since. Now it looks like we're going to test 81.60. So I'm going to wrap this video up. I just wanted to let you guys know as a trader, you have to constantly be learning every single day. You can't just trade the markets. You have to fundamentally learn everything about this. And what I mean is every single night before I go to sleep, I devote 1 hour of my day, 30 minutes of it being reviewing my trades from the day. Even though I still do that after the close, I always do it before I go to sleep. So the next morning I wake up, I have a fresh memory of what I'm not going to do. We don't want to repeat the same mistakes, and what I can do to better what's working for me, my trading style. Next, we learn one company every single night. We understand what they do, their suppliers, and the best way to do that, guys, simply go to their website. Every single company has a website. They will tell you everything. 99% of companies have an investor hotline, which you could call between 8 and 5, and we do that every single day. Also, it helps to have a gauge on what the analysts are doing and the economic numbers. A lot of people set their alerts, say you have an economic number at 10 a.m. and they don't know what it is. That's not good. Over here, we want to understand every single thing with the market and how it all correlates. Even if the number isn't significant, everything comprised into one main strategy will give you an edge. That's it, guys. I'll talk to you tomorrow. Have a great trading day.